Being a working parent can be overwhelming, but thankfully there are some awesome tax breaks out there to help you out. It goes without saying that making sure your children are cared for while you work can be costly, which is why the Child Independent Care Credit is great for working parents. The credit applies not only to children under 13, but also to dependent adults, and it lets you recoup up to 35% of your qualifying expenses. There are a few qualifications we should review. The care must have been provided by someone other than you or your spouse, since the credit is designed to help parents who can't provide care due to either working or looking for work. In addition, you or your spouse, if filing jointly, must have earned income or been a full-time student, and the care provider can't be a dependent you claim or another child younger than 19 years old. The dependent or child must also have lived with you for at least half the year. Be aware that the dependent care credit is phased out at higher income levels, and any dependent care benefits paid by your employer will reduce the amount of your credit. Now, what about adult dependents? Sometimes working adults have a disabled spouse or an elderly parent for whom they must provide care. Good news! The dependent care credit also applies to adults who are incapable of caring for themselves on their own. If the individual lived with you more than half the year, expenses such as home care or adult daycare programs can qualify for the dependent care credit.